those levels. Pathik Gandotra is with us, partner at Dron Capital Advisors. Pathik, good to have you back with us. Appreciate your time. As they say, half the job in investing is waiting. And you've waited a long time for Gokuldas to perform. I mean, it's been a big winner for you. And it's even on a day like today, it's up 3.5%. This month, the stock is up about 30%. And after almost about 11, 12 months, about a year of doing nothing, the stock has come back alive. Any triggers here? Is it company specific or is it the right sector? What's the big tailwind? And what's the outlook for this one?
I'd prefer to speak about the sector, Prashant. I think it's more about the fact that, as I was saying earlier, that the retail demand in the US revived about 6 to 9 months back. And the major customers who had actually stocked up on their order books post-COVID and then were destocking for the last 2 years, the destocking has stopped and orders were coming. I think the CEOs of all the textile manufacturing companies, garments, and even home textiles for that matter, have actually said on your channel and have had made statements that demand is reviving and capacity is actually for the garment manufacturers are full for the next 3 to 4 quarters, and visibility is very high for the next 2 to 3 years. Having said that, there are also long-term triggers like the Bangladesh crisis, which may eventually lead up to some shift of demand. It's a long-term thing, but that might happen, and so those things improve multiples. Plus the China Plus One, which is getting even stronger given the change of the government at the new president at the US. Apart from that, there are these free trade agreements that India is potentially signing with the UK, and then potentially over the next few years, even with the EU. So all these are very strong long-term triggers for the sector, and these impart visibility over decades, kind of thing for the sector. So that's why I guess the market is recognizing that. I think it's just begun. So we'll see.
This is begun. What are multiples at according to your? I mean, okay, you don't want to talk about Gokuldas specifically, so I won't go there. Got it. So that's one. The other is we had Gautam Dugard with us earlier, and we were talking about EMS companies, right? You were again an early investor in many of these. Dixon, you rode the first wave. I think names like PG Electroplast, etc. Specifically with, I don't know if you own any of them, but what's the outlook looking like now? So specifically for Dixon, this PLI scheme, right, is finishing. And I don't think there's any other, there's a PLI for components which will start. But that earlier PLI, which we don't know how much of it was just to get the industry started, and the industry is started and how. Do you think that finishing will make any difference? Or, I mean, they're large enough now and growth rates can continue 30, 40, 50% every year.
So look at the Chinese example. China did the same thing decades ago, that they initially gave support to the manufacturing sector in terms of incentives in whichever form, their own form of PLI. And once those companies became big, then they never needed anything like that. I think it's still early days for our EMS sector to, work without a PLI scheme. But I mean, there are PLI schemes that are all product specific. So I don't want to comment on companies, but there are many more PLI schemes which will be launched in the EMS sector. And I think all these companies have now figured that a wide product bouquet, a wide product basket, and a wide ability to make different kind of products, I think serves them well. And which is what I guess all of them are doing. So you had the mobile phone PLI, you have the laptops PLI eventually, you're having on white goods. So all these are coming one by one. I think these will fuel growth for the sector. The point is, all these companies are majorly expensive in terms of multiples. So I think the growth is very essential to sustain these stock prices, is what I think.
All right. Hi, Pratik. Good afternoon and good to see you. And Pratik, what's your view on the banking and financial space? One part of the street believes valuations are attractive over there because a lot of these private sector banks didn't run away. They didn't participate in that big party out there. But the other part of the street says that, there'll be pain for the sector on the whole, which in turn will reflect in maybe an underperformance coming in from the sector. How are you all placed on the banking and financials?
So, within the space, if you look at bank and finance earnings, I think the NPL cycle has come to the big NPL cycle had come to a close a few at least a year back, and so the numbers have started improving from at least from a credit cost perspective. Margins, however, are under pressure because savings are getting competed out to other asset classes, and so there's a race for deposits and for banks to maintain their margins. And as other asset classes take more and more of the money, they are competing with banks to fund the capex of the country, or to fund capex, or to fund working capital. So banks are at that kind of a competitive in a competitive disadvantaged position, maybe to fund all these assets. So I think margins for the banks are going to be are still going to be constrained. They don't have that kind of pricing power, and which is what I think is weighing on most bank prices. Some of the banks are obviously different, and they have done well. I think it'll be continue to be a stock specific kind of a sector. I don't think one can take a blanket view of an overtly bullish and overtly bearish view at the current point in time. Having said that, as interest rates come down, and then I think there's a chance that margins will improve because deposit rates may come down also. So I'd be more positive than negative on the sector, but not overtly bullish.
Okay. Do you want to give us the the financial that you would like that has exposure to a particular sector, or housing finance or something on those lines, so we at least get a hint in terms of?
Generally, I think that in falling interest rates, finance companies do better than banks. Banks also do well, but finance companies always do better than banks. In falling, NBFCs, microfinance has always had its own NPL cycle, but generally speaking, NBFCs do better than banks. So if I play a financial on the falling interest rate kind of thesis, I would play an NBFC.
Okay, and MFI, you made money through MFIs as well, Pathik, in the past. Some worked out, some did not. Where do you think that cycle is? You think there's a couple of more quarters of pain?
Difficult to say, but I guess so. I've heard from industry sources that the asset quality has started stabilizing in the sector, but I'd like to see more data and more data over a period of time, because these NPL cycles never normalize so soon. So you have to wait and watch. And I wouldn't mind missing the first 20-30% of a rally, which is more of predictive in nature based on the fact that a cycle will turn. I'd rather wait for the cycle to turn before taking a bet.
Wires and cables, Pathik, right? That's the other space. I mean, it's kind of faded into the background. Maybe stock prices not so much, but any interest here? You think they're good bets, or?
At least the sector where the sector which benefits from housing capex, the wire sector. I think that will benefit because there's going to be a lot of demand there. Not only wires, even if you look at all the stuff that is used in like tiles and sanitary ware, etc., which are derivatives of real estate. I think those will also do well because in the initial in the initial part of the real estate cycle, builders do well because their homes sell. In the latter part, building material companies do well. So I think that is what is going to happen.
By the way, any one or two themes apart from what we've already discussed, which has caught your eye, which you think one should look for ideas in?
No, Prashant, I'm mostly a bottom-up person, so no big themes. I think all I can say is that the previous quarter was very disappointing in terms of earnings. So where you see earnings is where you'll see stock performance, and I see growth clearly in textiles and garments. I see growth in EMS also, and in a few more sectors where, and these are two clear growth engines. I think IT might revive a bit because of also because of the AI theme that might also revive, but nothing spectacular in terms of growth. I think it'll all be mostly bottom up. One more thing I like to say, that there are a lot of SME companies out there who are growing very, very strongly. So want to look for growth possibilities, and these companies from very small size have done very well, and once they are listed, you can use growth as an important trigger to buy into these companies. Thank you.
Okay, all right, Pathik, we'll leave it there. Thank you very much for joining us. Good speaking with you here on CNBC-TV18. Thanks for sort of